Hey guys, it's Sam here. Just very quickly before we start, Guillaume and I have partnered up with Automation Boutique to write a brand new ebook for you guys called Going Beyond the Buzzwords. It's an amazing ebook that goes through all the things about automation, data, and processing that just simplifies the topics just in the way that we do all the time in Corporate Treasury 101. To pick up your copy, just go into the show notes and click on the link, or go to the website and find the partners page where we have a link to the ebook there as well with Automation Boutique. And then here's the episode.
Royston, thank you so much for joining us on the Corporate Treasury 101 podcast. To begin with, maybe, could you provide us with an overview of the current landscape of Treasury and where digital transformation fits in, please?
Okay, thank you, gentlemen, for inviting me to this podcast. I've been really excited and looking forward to it. So the way I would like to approach this is to try and just map out what I see as some of the drivers for where we are today. And I'm not by any means an IT expert or a technology expert in this respect, but I think this is fairly clear to a lot of people that know anything about technology today. So Web 1, I believe, is where the internet first began back in the 90s, let's say. And Web 1 is commonly known as basically where you kind of went on there just to find out information. People looked to search for data. So it's pretty much one-way traffic. The read-only web is another way how it was looked at. Web 2, which I would say probably is 2000 onwards, is where it became the participative social web, where basically people were going on the web and inquiring, looking for data. It was basically participating and contribution. So there's a two-way flow going on there. What's exciting in my view is Web 3. And it is happening as we speak. It's not quite fully evolved, but Web 3 is what they call the read, write, and execute web. And this is what's shaping a lot of what we're seeing with technology today. And we haven't even got to AI, by the way, but I'm hoping that, by building this kind of background to where we are today, it'll help hopefully your listeners to, and certainly help me to kind of frame how the world's changing and evolving and what we need to be looking at going forward. So it's very important to recognize that with Web 3, it's the first time in its evolution in terms of not just in terms of technology, but what they envisage is individuals like you and me, and corporates for that matter, anyone using the internet will become responsible for their own data, which is a very important commodity, in fact, as you all know, because companies pay a lot of money to have your data. So that's where I'll stop, because I know there's a lot more information on that you can research yourselves. But the next area I would like to cover is, particularly in terms of Treasury, what's driven Treasury's engagement technology, in my view. And I would go back to the economic crisis of 2008. And in many respects, it affected Ferguson as much as most other corporates, I would say. Why 2008? Well, we had some major changes following the economic crisis of that 2008, in that we had a change in senior management. And like most corporates, we had an internal review, what we needed to do to become more efficient, become more profitable, and so on and so forth. One of the outcomes from that internal review was looking at our technology landscape. Now, to be clear, I mean, I've worked for other blue chip international companies previously, but up to that point in Ferguson, we used to be called Wolseley, by the way, we'd only implemented a cash pooling structure and a TMS solution. We didn't really have the 13 cloud-based solutions we have today and the automation we have today. So even though we had some technology in place, the CFO that came in at the time quickly identified that the technology we had, our landscape, was not very, in his view, slick. It wasn't as automated as he would have wanted it to be. So that was the initial driver, in that he wanted us to make sure that in the Treasury function, we could evolve to become much more automated. And that was critical, actually, in terms of the sponsorship we received in Treasury, and to some degree, the role I then adopted to drive our technology development and our journey within Ferguson. The next milestone, in my view, as far as technology generally, was regulation and open banking in 2017. That was then brought out by the UK government, has also helped, I believe, to drive some of the changes that we're now seeing, particularly with fintechs entering the industry and being able to partner or at least collaborate with banks. And I still feel there's a lot of work there that still needs to be done, particularly, in my view, on the banking side. But we'll come to that hopefully later on in the podcast. The last piece, no surprise, the pandemic. Well, hindsight's a wonderful thing. I'm sure everyone recognizes that saying. But and let's be clear here. I'm not trying to suggest that we've got it completely right at Ferguson, but we were very fortunate for a number of reasons. One, as I explained, we had already embarked on our automation and technology journey back in 2008 or 2010. But by the time we got to the pandemic, we'd already implemented a cloud-based solution in 2015, which is Bellin, or rather Cooper today. And a lot of the technology that we currently have had already been implemented by then. So we had a very automated process. So with the pandemic struck, and also one other point I wanted to add to this, in terms of our group's evolution, particularly in the UK, we had moved offices, and in moving offices, the management decided to selected offices that were, first of all, quite modern. So they had the kind of like, pods and sort of meeting booths that you can kind of like plug and play, very dynamic, very kind of, like a WeWorks type scenario. And it also allowed us to work remotely. At that point, it was 1 day a week. So you could already see, and this is back in 2017, well, but not that we knew there was a pandemic going to happen, but we were kind of prepared for that sort of eventuality. So from day one, we had very little disruption from a treasury perspective to the operational work that we're doing. Our challenge, frankly, and I know we'll talk about this later, was frankly the banks. The banks were not set up to work remotely. And thankfully, they very quickly agreed to take digitized documents. So that was just a small example of how the banks adapted then. But then we can look at today. And the way I see today in terms of treasury functions, generally speaking, and this is very broadly based, there are a significant number of corporates that still use Excel spreadsheets in lieu of a TMS solution or any type of technology. I'm not going to say that spreadsheets are bad. They're not, because I use spreadsheets. Everyone, I feel, uses it as a tool. Where I draw the line, though, personally, is that in this current day and age, I feel that the technology that's available, whether it's a TMS solution or some other, perhaps maybe lighter form of technology that enables you to digitize your transactions and to enable you to be more future-proof, as I call it, and also not to mention being secure from a cybersecurity perspective. I think this doesn't excuse the fact or the option of using spreadsheets for that, in my view. And they're relatively more cost-effective, in my view. And then you've got a fair percentage of corporates that use cloud-based solutions like Ferguson, which I think is increasing as each day goes by. But there is a third group which maybe use, like Ferguson, both Excel and spreadsheet cloud-based solution, but it's the advanced AI, machine learning technologies that we haven't quite mastered at Ferguson, but we are very interested in. But I know corporate treasurers that are not only using this technology, but have actually studied it in great detail and great length. I'm not going to talk about the programming aspect, like some treasurers are interested in Python and so on and so forth. Because frankly, at the end of the day, for the vast majority of people and treasurers, I would imagine you want to be able to use the product where you can add value. And not everyone's going to be necessarily inclined to go into the programming language that say Python or some of these other software solutions can offer. But the thing that has been a game changer, and this is why I believe life in treasury suddenly taken a new dimension for me. A year ago, AI was touted as a big buzzword, as was APIs and a lot of other terms that we use. But where the landscape's changed for me is with not only ChatGPT, but Microsoft's Copilot. There are a number of other technologies and companies out there that basically democratized AI for the public. And so really anyone without any knowledge or expertise in programming can now get the benefit and begin to use AI in a very powerful way. And there's so much more that really needs to be said about AI, but I know we haven't got the time to do that here. But one very quick point I want to add in terms of when I mentioned AI. So we know ChatGPT 3 exists out there. And I first came across it last year when it was first released. I was very excited about it then. But I was attending a conference recently, this last week actually, which is looking at future or transformational technologies hosted by a bank, a large US bank. And I was very, challenged and inspired, frankly, to hear that ChatGPT 3 is quite, how do I put it, outdated in terms of the ChatGPT 4 that's now being created or is available, let's say, or is going to be rolled out. And interestingly, they're calling it ChatGPT 4, and I'll put this in inverted commas, with common sense. Now that sounds pretty powerful, because they are, if you look deeply enough to ChatGPT 3, you'll see that when you put in certain questions, it doesn't always come up with a very sensible answer. And there are loads of analogies, and you can look this up on the net. Whereas ChatGPT 4 is actually being designed to consider your question and come up with a very sensible and rational answer. Now, obviously, a lot of what I've spoken about so far, you could argue, has nothing to do with Treasury in per se. But at the same time, I would say this is the technology that we should be looking at and we should be aware of. And it is and will be used more widely in Treasury, even if it's not necessarily something that you are, has AI on the front of it. Certainly behind the solution that you'll be looking to use, AI will and certain other technology will be very much at the base of that solution. I'm just going to stop there because I sense you might have a question or two.
No, but that's absolutely great. So thanks for this, Royston. Lots to unpack. First of all, I really enjoyed the analogy with Web 1, Web 2, and Web 3 in the way we, and obviously treasurers as well, first consume data only and consume information only, then switch to a bit more of an exchange, not completely equal exchange yet, but it's like consuming and giving a bit of input, and then being part of the execution, giving that feedback. And when we liaise with technology, it's also being able to have the implementation in-house, to set things up, to be in relationship with the different system and implementation and technology vendors. So I like that analogy. To maybe deep dive into one of the things you mentioned and to highlight the role and benefits of technology in Treasury. What do you think would have happened if you would have not had a cloud-based solution in place during the pandemic at Ferguson? You said, luckily we were already implementing some cloud-based technology, but like, what did that enable? What did that allow you to do that would have not been possible if the technology wasn't there?
I think for, like any corporate treasury function, you kind of look at what your processes that you run on a day-to-day basis. Frankly, before the pandemic, I think most corporate treasury functions for large companies would have some sort of business continuity plan or disaster recovery plan. So this was very much part of our DNA. And if we go back 10, 15 years, they said, quite comically in a way, thinking about it, what you can do today, you'd have a hot site. So the general scenario is if let's God forbid, a building burns down or is about to burn, you'd go to the hot site and you'd work there. Clearly with Wi-Fi, that's not a requirement anymore. And in fact, we always thought about this before, again, the pandemic, would say, okay, well, buildings inaccessible, we just go to the local, whatever coffee shop there is that has Wi-Fi and we work from there. But actually, we can work from home now. So the point being is, one is about connectivity, right? Because you want to be able to connect. And we have to make the assumption, even if you haven't got cloud-based solution, that you still need to connect to your banks and to get, to obtain reports and sort of make payments. So there's an assumption here in terms of the timing around this, because how far do you go back in terms of saying, well, without this technology, the cloud-based solutions, what would you do? And I don't think it would be helpful in my view, to talk about, say, what was in place 20 years ago, because clearly that's not, realistic. But I would say if we didn't have cloud, certainly going back 10 years ago, 10, 12 years ago, a lot of our were based upon logging onto a computer, logging into a banking solution, or into spreadsheet onto our network. So you'd expect at the very least we'd be looking to do that. But as I said, having the cloud gave us that independence, that flexibility to work remotely. Without that, I think there would have been challenges. I mean, I've heard stories about companies having to ship computers for their staff to work on remotely and from home. So we have laptops, we had laptops, so we are again able to continue working, sort of uninterrupted. I think security is a big issue, and was a big issue rather. It wasn't so much for us, but it was for a lot of companies, because you're working in a very secure, generally more secure environment when you're, thinking back to, working in an office environment and using your offices or your company's broadband with and so on and so forth. But frankly, and again, it's hard to kind of sort of try and, give an explanation in terms of what would life be like without that, because apart from, it's a kind of fairly binary option where you're either in the office or you're working from home. But all I can say is certainly from Fergus's perspective, with the technology that we had, and also the infrastructure, our network, and the security that we've got within our internal network, helped protect us. So as much as I did use, and I do use my local broadband, when I log into my company's network, it's using all the embedded technology and security that they have to offer. And I think nowadays for large corporates, you can't avoid, I think one answer to that question I just thought about is VPN, right? Virtual private network. So in the past, you'd have to actually log in to the VPN to be able to connect to your company securely. Nowadays, it's not particularly necessary because, again, the technology has evolved and it's improved. So our company has the right structure for us to do that safe.
Yeah, and it's particularly interesting to hear, especially given that certain companies still don't have a TMS, let alone a cloud-based TMS. Like big players, big companies are still a bit delayed in their technology transformation, let's say. Therefore, are facing all the issues that you're mentioning here. And another point that I think is particularly interesting is everybody we talk with on the Corporate Treasury 101 podcast and outside of it, everybody agrees on one point, which is talents are hard to find, to attract and to retain. But like being able to work remotely is definitely one of the criteria that needs to be met, especially for the younger generations. So I like how that highlights the importance of technology in Treasury in particular. And the last question that I'd like to explore with you, Royston, based on what you said, artificial intelligence. So you gave a little bit of an update on ChatGPT, and indeed those are very interesting advancement there. But what are you doing at Ferguson, or maybe what do you see as being an AI-enabled Treasury task handling, let's say? Or what would you like to do with AI beyond the ChatGPT and the large language models?
There's a good question now. Oh my word. So, I mean, it's a limitless landscape in my view with AI. I don't get me wrong. I mean, as I said, I'm not a technical expert when it comes to a lot of these technologies, but I do see the value in the potential benefits that they have to lend on. So I would look to the fintechs and the banks to some degree, certainly our internal IT department, to guide me when we're looking at potential solutions. But to answer your question, very simply, cash flow forecasting. This is one of the top pain points that most treasurers always put in terms of their top three categories for what we have that keeps them awake at night, whatever you like to call it. And I've looked at solutions in my 35 years in Treasury, and there are some really, really good cash flow forecast solutions out there today. But I think what AI is going to do, particularly in the next year, is it's going to break down the glass walls, because I feel that, I mean, we're no different in some respects, and then we have certain challenges internally in being able to get all the data centralized, because we are a collection of businesses and we have so many disparate systems. And most solutions out there, although they will claim to be able to work with whatever situation you've got, where you've got internal challenges in how you get that data, this is what AI is looking to do now, I think. And AI is helping and will help, I think, companies like Ferguson to get to a point where we're able to, really harness a lot of the inefficiencies that might exist in terms of, sort of communication between systems or sometimes departments. Now, in many ways, AI, it really depends on how imaginative or creative you want to be. And I do whenever I say that, I keep thinking also, I know there's a lot of noise around security and I'm fully conscious of that. But from my perspective, as long as, you're doing whatever you do, whenever you look at a solution or implement a solution, you follow your due diligence, you follow your protocols your IT department have set, you don't just go for the first solution that comes along and so on and so forth, then, you can't do any more than that. And so therefore, the way the world evolves, in my view, and if you look at anything like even cryptocurrency, there are many reasons why treasurers won't engage and we don't need that, folks, for that matter, because the volatility involved. And the reason I'm using cryptocurrency as an example is just to demonstrate that some of these areas need time to develop and evolve. Doesn't mean they're bad. It just means that they're not right for the industry or the for us now. I still believe in digital currency, frankly, and so we'll come back to that later. But coming back to your question about AI permeates all sorts of areas. So I mentioned cash flow forecasting. There's another technology there's a particular favorite of mine called digital twins, and why I think that's a great technology is because, for me, digital twins is really, it's like a virtual representation of an object or system that spans its life cycle. In other words, and it updates from real-time data and uses like simulation, machine learning, and reasoning to help decision making. There's already huge applications in the commercial world. In people in Norway, they're using it in the bridges, and in a lot of automobile industry, they're using it to look at to develop building cars. Why do I think it's important in Treasury? Well, for the simple reason that if you could set up a digital twin of your Treasury function in the ether, you could then begin to plan and sort of calculate in advance what would be the impact if this happened. For example, a pandemic. But it could also obviously be applied to FX hedging, commodity hedging, all sorts of other risks that we currently manage. And this is why I think digital twins is so exciting. But as I say, with AI, it is really a bit of a Pandora's box, but slowly but surely, each day goes by, I'm seeing more and more very positive, very exciting solutions coming out from either fintechs or banks. And also closer to home, I mentioned Microsoft Copilot. Well, one of the things that I've found, and this is with a colleague of mine at work, you can actually use Copilot to automate any process you want. It might be a bit crude in the sense that I'm sure a solution or fintech could do a much better job. But frankly, if you've got a process, might be fairly manual at the moment, like let's say approving payments, Copilot will write the program for you. You don't even have to do the program yourself, write the program yourself. And they will even provide you an app. You can set up an app where you can get your approvers to log into the app and confirm they've approved the payment. It's little steps, admittedly, but it's important that if you're not only aware that this exists today, but be also conscious that we've got a new generation coming to the workplace who are completely familiar with smart technology and are probably more familiar with this type of technology. So I know we're going to come to that question later. can you imagine what the Treasury in 5, 7, even 10 years' time is going to look like? I certainly didn't envisage it would be this quick, because I was asked this question, I think 5 years ago by a famous recruitment consultant. I'm sure you know who he is. And I was saying, well, in 10 years' time, I think, we'll be working remotely and it'll all be mostly online and what have you. And obviously, unfortunately, with the pandemic, but looking at the positives, we've seen how much more value we've got in terms of what we're using, the technology we're using, and in terms of flexible working.
Super interesting. Listen, everything you said is super, super interesting. However, I have one thing I would like to say. My experience with Treasury is that the Treasury is the most risk-adverse department in the organization.
What off?
Sure. And these technologies are, I don't know if they're risky. AI might get there, become risky. But certainly implementing any technology, changing processes, even for a financial gain, can be quite difficult, especially in Treasury departments. What do you see are the biggest barriers to implementing these kind of technologies in Treasury departments?
That's a very good question, actually, because you're absolutely right. This is the area I keep coming against time and time again. And, my job is not to convert or convince anyone that they need to use technology or they use this type of technology. I would say I would want to share what I know and what I see, and hopefully try and encourage treasurers to be more open-minded. Because frankly, at the end of the day, whatever place you're at in terms of your personal position, I always default to the fact that I imagine 9 out of 10 treasurers, if not all 10, have a smartphone. And if you've got a smartphone, I find it very hard to understand or believe that you don't engage with some sort of technology. In fact, I would imagine there's some treasurers that probably have a lot more technology in their phone than they may admit to using in the workplace. And this is not, again, unusual, because historically, like you said, we are very conservative. We are gatekeepers and risk managers for our company in terms of the financial assets, and so it's a good reason for us to be cautious and conservative. But I don't think that mantra or that mentality can work anymore, for the simple reason that you only have to look at the last even 5 or 10 years and observe those companies that refuse to pay attention to, let's say, the writing on the wall in terms of technology, in terms of how they've not survived or been succeeded. And then on the other hand, you look at the largest fintechs, or not fintechs, largest companies in the world, whether it's an Amazon, Google, Microsoft. Not surprisingly, these are technology companies. So, I mean, I'm kind of doing a broad brush approach to this, but you're absolutely right. I did do an article. It was mainly designed at the US market, because it's going back 4 or 5 years, where the question you've just posed was exactly apt, which is, why would the treasurers need to change? And there's this I hate the expression, but it is quite appropriate. So if it ain't broke, why fix it? And don't get me wrong, I'm also very much against finding a solution for a problem that doesn't exist, or fixing something for the sake of fixing it. But again, when I look at those expressions or those statements, I say to myself, where am I today? I'm in 2023. I am surrounded by technology, not me personally, in society. Wherever you go, if you travel, you're engaging with technology. You've got your biometric passport, generally speaking. Now, tell me one person that would say, actually, I'd quite like to go back to a world where there's no smartphone, there's no, internet. I know, I get it. There are times when we all want to do that. But, from a business perspective, we need these technologies. We need to engage them. But I also understand this is not something that you can get involved in very easily. I was fortunate in terms of my journey, in terms of where I was almost led into this, but I also wanted it. So I did have a passion, a desire for it. So it does help. But the question that comes up a lot, and it's very similar to the one you just asked, is, well, how do I go about getting myself, if you are open to technology and you want to get into understanding what's happening? Well, I say quite often, you don't have to, jump into the deep end, and as a treasurer, you wouldn't. But you can go light touch. You can look at your banking partners, and I'll explain what I mean by that in a minute. Look at your vendors. But then if you're not maybe blessed with a huge amount of choice there, go online and look up some of the technology. There's a host of material in terms of the Treasurer, the ACT Journal, Treasury Today, TMI. There's lots of Treasury and conferences, frankly, and not to mention your podcasts. So
thank you.
Waiting for
like, is he going to say it? Is he going to say it?
Of course, your podcast. I mean, frankly, these are the sort of resources that are so widely available. And frankly, again, this is the other point in terms of technology. You don't even have to be physically listening to this at the time it's released. You can listen to at any time you want. So there's no real excuse, in my view, for treasurers and people generally going out there, or not even going out there, just making themselves aware and kind of equipping themselves with the information. But I do understand it is a bit of a minefield. So coming back to what I said about the banks are a great resource, absolutely great resource, for the simple reason they have the financial, most banks, the large banks, resource to do this. But quite often they are so keen and willing to engage with you as a customer. Like I did, I went to this conference where they kind of put on a showcase for transforming technologies. I mean, it's amazing, the stuff. And the people that were presenting there were people that went to Bletchley Park. So they're seriously intelligent, seriously, sort of industry leaders. But this is one of our nation banks that put on this conference. And so equally, I would encourage treasurers. I know you have to make time, but these aren't conferences you have to attend every week. It's once a year. But it's definitely worth the investment because, it's even, you mentioned AI, there's APIs, there's in cyber fraud, we could talk about that in a minute. But, it's all of these areas that are kind of probably areas that we don't, as treasurers, gravitate to naturally. But I think in this day and age, you can't afford to ignore them.
Super inspiring. One of the risks that comes with all of the technology adoption, Royston, is cybersecurity.
Yeah.
Right. And it's probably also an area where treasurers would like to be a bit more educated on, or probably arguably should be more educated on than today. Now, this isn't just the cybersecurity of, hey, make sure you don't click any links that come from random emails, or, make sure that you're not giving away sensitive information like your credit card details in an email or something like this. This is corporate cybersecurity, corporate treasury cybersecurity 101. So it's also become a bit of a buzzword as well, though. So could you take us through the cybersecurity considerations that all treasurers should have in mind, knowing that we are moving into a more digital world?
Yeah, that's a big question, actually. And to be honest with you, this should be, I think it is, frankly, one of the pillars for most corporates when it comes to security. I think it's important to also recognize the relationship between, and we're looking at Treasury here specifically. I know you mentioned it's from a corporate perspective, but within that framework, you have to consider the relationship with IT. I think historically, it's always been a bit of a challenge in my experience when working with IT, trying to get the right level of support. And that, it was no different at Ferguson in my earlier days. And I managed to finally convince IT that the sort of approach we used to have is very much along the lines of how many users do you have in Treasury? And as you might be aware, most Treasury functions are very small. The average is probably 4 to 5. And you compare that to one of our branches where IT will also support, and they say, well, we've got 100 people in that branch. Well, clearly they are taking more priority than over your 4. And that's how they used to praise it. When I managed to make them aware, certainly the senior person in charge, that it's not about the number of people that are employed in Treasury. It's about the amount of risk. And you put a quantum to that risk, and he suddenly changed the game then. And then they began to recognize that actually we are a very important department. Not say we're more important than anyone else, but in terms of what the risks we manage. And so we were escalated and we were put on, like a kind of top group for support. Why it's important and why I'm mentioning and spending time talking about this is because that was how our journey at Ferguson evolved. Cybersecurity, as much as it's the responsibility of every individual, in my view, it definitely has a very technical nuance to it, as you kind of alluded to earlier on, for the simple reason that most cybersecurity attacks do come from a corporate perspective in respect of this ransomware or sort of phishing emails, that sort of thing. And we do rely on our IT department within Ferguson to block out the vast majority of those attacks, vast majority. But there's still a lot, I want to say it's not significant because it's more like a small percentage of attacks that might get through. We, again, in Ferguson, manage some of that through training. Training is absolutely critical. And it's not one-off training. This is regular training in terms of, at least annually. And if, sometimes our IT departments send out sort of test emails, if you like. If you're one of those people that constantly fail, then you'd be put on a, sort of a kind of a specific program to try and make sure that, you're suitably educated that you don't make that mistake again. So the whole thing about clicking on a link and so on and so forth is very important. But as you also alluded to, the whole cybersecurity space isn't just around clicking on a link or picking up that phone call. And there's some good, material out there. Not only you can get that from internally, hopefully from your IT department, from your banking partners, but also the governmental agencies that exist. Go on there and get that. But ultimately, my opinion is the best form of defense is around your processes. Because it doesn't matter how much technology you implement. If, for example, it's a very silly example, but I'll give it because it kind of is apt. You put your password on your screen, post it. It could be the most secure technology in the world, but you've just, given an opportunity to a criminal to get into your system. And those sort of instances are quite often ways of how scams and criminals are successful. So this is why I say your processes are critical and you need to be reviewed constantly, because if you've got good, robust controls and processes, then I think the technology that you implement should supplement and only help to make those processes much more efficient, much more secure, and again, much more easier to operate.
Super clear. Super clear. So what are those processes just on a fundamental level, Royston? If I was a treasurer that came to you to say, hey, Royston, I know nothing about cybersecurity, what's the first things I should look into? Give me the names and a 2-line description about what those things are. So firewalls is an example that comes to mind, or was a really, really good one. Is there any technical stuff that you would show?
I wouldn't go into the technical stuff necessarily, because again, for me, and I forgot to mention this, I mentioned that I feel every individual is responsible within their company for remaining cyber secure to a degree. I also have this kind of sort of visual way of how I map out the responsibilities. I see IT as being the gatekeeper for the company in terms of cybersecurity. So that's where your firewalls come in. But I'm not going to be able to explain to you how technical they are and how good they are and what names they have. But I do know that they invest a fair bit of money, as do all the big companies, Amazon, Google. They're obviously customers using their platforms, so they have to be secure, and they put a lot of money into that. Then I see Treasury kind of in the middle in terms of where the users, we interact with IT because they kind of most either host some of our technology or certainly supporters in that respect. But we are responsible to make sure, like I said, that we have controls and processes in place. And when I refer to processes, like you asked for examples, payments, right? If you're processing a payment, you want to make sure that the way that payment's processed, you have some certainly have segregation of duty. when you are paying a supplier, you want to make sure that you have, again, a separate group, maybe outside of Treasury if possible, validating those suppliers independently, not just going off the document that they've been given. And then certainly within our company, we have a system that has what we call 4 eyes principle. So that means that everything has to be approved by 2 people. And we don't, certainly this is the way we use the system, we don't have the ability to enter free format payments. So every payment we make has to be off a pre-approved template. And that's, again, part of our control. So that's one example of how Treasury could be acting in trying to protect and trying to support their cybersecurity processes. Then you've got your external parties that you interact with, whether it be the vendor or your bank. Now, if it's a vendor, you would expect and assume that their technology is secure. I mean, again, this comes back to how did you select your vendor? Did they pass all your requirements, your IT requirements, your requirements? There's certain due diligence that all fintechs have to go through. It's actually quite stringent. SOC 1 certification, which is something that every cloud-based solution has to have. And this is just like a certificate that says, they've been audited, they've got the right appropriate controls in place, that sort of thing. And the same with the banks, frankly. The banks also have to have certain certification in place to confirm that they are, from a technology perspective, compliant. But you'd expect the banks, being who they are, have their own very secure controls and processes in place. But the point I want to make here is, after the point you release the payment, then become the responsibility of the financial institution to make sure that they are, they have the right procedures and processes in place to then effect the payment successfully. But it's so critical that that part that Treasury play in the middle between these 2 parties is absolutely secure, and that we don't kind of ignore the processes we have need to be constantly reviewed.
Do you have an example in Ferguson where cybersecurity played a big role in safeguarding the company? I mean, whatever you can share, I guess.
There are examples certainly where we've had potential attacks and they have not been successful. And typically it's around payments. It usually is, it seems to be the most popular example. Yeah. And this would be where, there are myriad examples of the different types of attacks that you can get in terms of cyber fraud, like, potentially, like I say, a fraudulent invoice. But, say if you have the right processes in place, then you can easily worm out these fraudulent companies. It's very sophisticated. We're not sure how much, again, you can go to a lot of detail around this. So even when you look, when you get a phishing scam, which is someone calls you up purporting to be a bank or a particular vendor. And, as I said early on, you should really validate that those details are correct. But what can happen sometimes is if you say, right, okay, I'm going to confirm first of all the details are correct, and you try and call out using the same phone, sometimes they can divert that call to themselves, to the scam or the fraudster. So you have to be very careful with, again, how your process works when you look to validate these sort of types of examples. This is why I said, if you can, it's best to segregate who does what, because then for a fraudster, they're ringing, say, me in Treasury, and they expect me to act upon what they're saying. It's not going to happen, because I'm not the person that's going to validate that particular payment or that particular beneficial supply detail. So this is, again, I hate to kind of harp on about it, but it's important, I think, any company to sit back, and you get consultants out there that can help with this as well, and look at your landscape, look at your processes from A to Z. It doesn't matter what size you are, how big or small you are. And then if you're not going to use external consultants, try and objectively assess where you see where the loopholes. So if you've got 2 people working in that Treasury function, and you're saying, well, I'm going to be the person that approves a payment, you're going to be the person that enters the payment, there's potential risks there. Now, there can be technology that you can have implemented where it's possible to sort of help not have as many people as as you'd like to segregate the roles. But at some point, you have to decide for yourself, is it worth the risk? Because that's always the issue. When, it's like any insurance policy, I guess, you don't really know how much it's worth until you have to claim on it. I think everyone doesn't want to get to that place. So this is the cost I feel like you cannot really afford to ignore. Plus, you could also, and we go into the bit of cybersecurity a bit more, there's cybersecurity insurance. And that's another really very good resource, believe it or not, in terms of helping you to become more protected and cyber aware. For the simple reason that most reputable cyber insurers offer free assessment as part of the relation, as part of the premium. So they will come in and assess where your loopholes or your risks are. And then you have that choice. And not only from the perspective of what you need to insure, but also from the perspective, how do you mitigate that risk?
Yeah. I think we can never emphasize enough how critical it is to prevent cyber criminality, especially in Treasury. When I think that Treasury is the place, if we are the custodian of cash, then we are the primary focus of this type of organization who would like to get into a company's system, because the whole point of cyber criminality is money, and Treasury is where money is managed. So I see personal data and clients' data being probably as, if not more sensitive even. But since this is where all the payments go through, at least, if not are managed by, where all the money and the access to money is organized, Treasury definitely is one of the potential primary targets of cybercriminality. Beyond the basics, Royston, what are some advanced cybersecurity strategies that treasurers can or should consider implementing when it comes to fighting cybercrime?
It's a good question, but so it depends how much you want to spend, I guess. I mean, it always comes down to this. I mean, I personally wouldn't necessarily look, I'll answer the question, but I wouldn't necessarily go there at the outset, because as I said before, the technical side of cybersecurity, I would definitely default to IT. So I would rely on my IT department to provide us with the tools, as they do, and the infrastructure for us to operate in a very safe and secure way. It's not really my job or Treasury's job to go out looking for software that's going to protect us in terms of, sort of from a technical perspective. When I look at a solution, let's say a treasury management solution, of course, I'm very interested to know that it's cyber secure from the perspective that I say it has the SOC 1 certification. But then I look at my controls and my processes internally, and I think to myself, is this solution going to enable me to implement these controls and to operate these controls successfully? Because that's what it's doing. It's not, the solution itself is not selling itself as saying we're going to protect you from from cybersecurity full stop. Because as I said before, it relies on how you also act and how you can sort of maintain all your kind of say your passwords and so on and so forth. But there are solutions out there where they would certainly assist companies with how you can reduce the risk of being a victim. For example, around payment patterns, I'm thinking more now of a shared service center, accounts payable, that sort of thing, which doesn't always have to come under Treasury's remit, frankly. And then they're also thinking of data. You mentioned data, your supply data. So there are solutions out there that can help you to manage your supply data, sort of vendor validation as well. And these are very important because, again, it's really, you're really responsible for making sure, let's say, that you pay to the correct supplier. But the degree to which you say, or someone could say, there's a magic solution out there that would somehow, you just press a button and implement it and suddenly covers you in this sort of insurance bubble. I don't think that's either exists or it's necessarily helpful, because I think what you want to avoid is Treasury getting into a situation where you don't have to think about the sort of potential risks that exist out there. The minute you do that, that's the time when you become a victim. So I think the basics, and and as much as I'm a big fan of technology, I still believe very much in the basics. We need to understand what the basics are about how you manage risk and, how, sort of Treasury 101 works. But technology is an enabler. It's a tool, and that's how we should use it. But that does not, exonerate us from knowing how to manage that risk and how to do it in the most efficient manner. There are companies that I could name, but I'm not sure whether it's something that you want in this podcast there.
No, happy to. If you have, so if that could bring good value and insight, and you believe those are trustworthy and good companies, 100% feel free. So which ones are you thinking of, Royce?
One company I've come across is called NS Knox, and they're quite strong in terms of cybersecurity, and they're actually particularly good in this particular area you just described, particularly if you're a smaller company and you haven't got, like you said, the necessary security or whatever. They're very strong in that. It's NS Knox, and then they certainly, I've known them for a few years and I can't network with them, but we don't actually use their software because, let's say, we're a large company, we're based in North America, and we have other providers already, but they're certainly very good. And they also reach out to a number of treasurers at Treasury conferences. That's why I know them quite well.
Yeah, no, that's very good. We'll put a link in the description for people who would like to check out NS Knox, if that's something you would be interested in. Royston, so obviously, we can imagine that with technology evolving, cybercrime is evolving as fast, if not faster, than the technology to prevent it. So how can people keep up to date with the latest advancements? And so where would you recommend treasurers to go and stay updated and ensure their departments are protected against emerging threats?
No, it's good. That's a great question. Absolutely. So I sometimes, when you ask that sort of question, I have to assume, and it's unrealistic, I know, but I'm one person. I'm the only person in Treasury, and I have very limited access to resources that I know. So my first port of call, believe it or not, would be a bank, because I'm sure every corporate, no matter how small or big you are, you have to have some sort of financial institution. Now, hopefully that bank or financial institution has some extended resource they can share with you, or at least invite you to. If that's not possible, go back on the internet, and I would go to the main governmental website, cybercrime websites that exist. You can find them quite easily. Just look on the internet. But also there's resources. I say, apart from your podcast, you can go to if you can attend a conference, or sometimes webinar. Banks quite often put webinars on about how to combat cybercrime. It just would depend really in terms of how far you want to go and how much material you're willing to kind of read, because there's a copious amount of material. I, with Bellin 4 or 5 years ago, published a brochure, if you like, on cybersecurity, all the main scams of the time, and what's best practice. We actually, in Ferguson, quite proud about it, won an award for the best cybersecurity solution back in 2019, I think. But again, it's because we collaborate internally, and we always looking to try and ensure that we are using, the most appropriate, most efficient, most cyber secure protocols and processes. But the whole and this is what's interesting to me. When I first came across the topic cybersecurity in Treasury world, I noticed there was a stigma attached to it. Not many people, treasurers, wanted to talk about it for the simple reason that they were worried that it may look bad if they admitted to being a victim. As soon as that was demolished, I think, frankly, nowadays, no one can say they're not a victim, because if you do say you're not a victim, then most people will say, actually, it's not the fact that you're not a victim, we just haven't realized it yet. Because, it's insidious. But the point being here is, I think now that it's much more accepted and more treasurers are collaborating and discussing more openly about the sort of, like I am, frankly, the sort of steps they've taken to combat cyber fraud, and what's available out there. I think that's also quite important. Is don't feel shy about going on LinkedIn or trying to reach out to myself, for example, if you want to know more about cyber security.
So, Riz, I want to switch over to another passion of yours, something outside of all the amazing work you're doing at Ferguson with cloud-based systems and whatnot and cybersecurity. The Treasury Dragons, which sounds very, very cool. Could you talk us through what that is and kind of how you got involved in it?
Yeah, sure. I mean, to be honest, it's coming up to 2 years, I think, in terms of being a Treasury Dragon. I was first invited by Mike Hewitt and David Kellen to participate at the Dragon. So essentially, it's a panel of 4 of us on there. So David Kellen is the lead Dragon. He's an ex-treasurer, but now he's got his own consultant.
Interim treasuring. We partner with David on quite a lot of things.
Oh, great.
Already, actually.
Yeah. And
he was a trainer on our course in London, our treasury crash course in London.
Yes, I remember seeing something around that. And then obviously there's Kira Keelan, who's also a treasurer for a startup based in the US. And you've got Andy Gifford, who's an ex-treasurer, but he now has his own consultancy. And there's myself at obviously Ferguson. But the general kind of format's very similar to, if you know, the kind of like the Dragon's Den, or I think it's
very British show.
Den, or
for our US listeners.
Yeah,
it's a very British. It's like Shark Tank.
Yeah, Shark Tank. That's it. And the only difference is we're not putting up our own money here, and it's not as well because of that reason. I guess it doesn't have to be that ruthless, but we do put the, or at least Mike's very good. Mike Hewitt's the kind of the moderator, puts the vendors through their paces. They have literally 7 minutes to present and 3 minutes Q&A. But what's so great about this, and bear in mind, this was started before the pandemic. So certainly through the pandemic, it's a great sort of opportunity for anyone. It still is, frankly, for anyone who doesn't want to necessarily engage with a vendor directly, to kind of have to conduct a bit of window shopping, quite kind of in a relaxed way. So yeah, and obviously as one of the Dragons, I get this first-hand
unique opportunity,
what they have to say, and also to ask questions. So definitely very excited. And also excited about the how they've evolved. The solutions, the various solutions, because they're not. There's probably a fair number of kind of very popular recurring solutions that come up, and you can see how they kind of change or how they progress from time to time.
Super cool. So the concept is you're these 4 dragons that are evaluating these vendors that are coming on, similar to Shark Tank or Dragon's Den, these kind of style of shows, but for Treasury. So it sounds super cool. And you would evolve through all that. What's the, have you seen, what's the interesting stuff that's come across the show? Has there been any solutions specifically that you were like, wow, that's, and again, we don't mind, as long as they're good and you would say genuinely you like them and you're not trying to sell something. I'm definitely interested just to know, and feel free to name drop.
Yeah, I mean, do find though in the industry the same names come up from time to time, because they just the way the solutions work. So I thought we had a session on cash pooling a couple of months ago, and I think there was 3 vendors in that case that presented. With Cooper was one of them, which is the system we use, Iron Treasury, and Cobase. And I thought that was one of the best sessions I was able to preside over as a Dragon. I mean, to be honest with you, the standards are so high anyway. So, you asked me to pick one, that's kind of one that, and cash pooling is a very hot topic as well. So it was just quite great to see these vendors kind of developing their solutions in the way they did. There've been topics on bank connectivity, fraud and cybercrime, which is where I say NSNOX also appeared on, which was particularly good. FX risk management, bank account management. There's a whole host of other areas which, frankly, when you kind of, in one of the earlier questions you asked about, where do I go if I want to try and educate myself, or just to find out what's going on? Well, this is another good venue, or I'm not kind of unplugging it, but frankly, even if I wasn't on there, I'll be wanting to listen to that, because first of all, you get to see the vendors kind of pitch their product in 7 minutes. So you don't have to give up a whole hour necessarily to hear what they have to say. Then you also get an opportunity to ask questions online. So and if they don't answer the questions straight away, they'll commit to answer them offline, if you like. So, there's lots of reasons why it's quite a good avenue to take advantage of if you're looking at a particular area, whether it's cash pooling, FX risk management, cyber fraud, to see what's available out there.
Super cool. Are there any industries? So you said that there are certain industries and certain names that keep coming up. Are there any industries, or maybe not industries, are there any
Companies,
treasury topics or treasury areas that you wish you saw more of, or you haven't seen anything innovative come through yet where it is needed?
Yeah, I would say it comes down to, where are the pain points, right? I mean, it's a classic case of, yes, we'd like to see more of that, but we want to see more of something that actually works.
Okay.
So pain point for treasurers, and certainly for us, is KYC, know your customer.
I'm not the first person to say that. We had an interview 2 days ago where we asked the exact same question. I'll go live before this. And the exact same answer came up. It was KYC.
And it's astonishing that we still have this challenge today where I know there are solutions that exist out there, but I don't think they necessarily work to the degree that we've got this challenge within the fintech industry. It's not their fault per se, where, they have a really great solution, but underneath that solution, they're completely reliant on the bank or the banks. Because if it's cash pooling or it's KYC or bank account management or even payments for that matter, there are some fintechs, like even the one that we use, when we make our payments, although we need a bank, it works really well because it's using Swift. So we don't necessarily need, we're not reliant on the bank in order to make sure that the payment is processed from our end, if that makes sense. And it's done very efficiently. But some of the other requirements like KYC, you can get a solution that says, oh yeah, we can help you with, managing your bank account mandate and you can, do this, that, and the other within our system. But then you'll still be held to the bank, because the bank might then say, but doesn't fit within our, requirements. You have to kind of submit this form, or you have to do this, or you have to do that. And of course, the fintech can't do anything about that. So you're kind of stuck then, or decided with the fintech in what you can actually achieve, even if you want it to be a bit more automated. There's only so much you can do, and then you're kind of not mercy, but you're kind of reliant on what the banks and which bank you happen to be dealing with. Cash flow forecasting, I have to mention that, because although I've seen a fair number of solutions, and I think this, to be fair, it's really incumbent on the corporates to try and address some of the challenges we have. But as I said, I think early on, I am a firm believer that this next year, with AI and what's happening with AI, for the first time, corporates will begin to see a really decent solution in addressing the cash flow forecasting challenges that we face so far. Whether it's with a third-party provider or just using AI within their companies to facilitate the position they get to where they can use a fintech to then kind of find or complete the end part of that journey, I do see that at long last, that pain point that we've talked about for so long will start to crumble. I really believe that.
Exciting. So if there's any vendors out there that are interested in coming up with the next money-making product in Treasury, then they should focus on KYC as a solution and a really good cash flow forecasting solution, hopefully using AI, and then come on to the Treasury Dragons to try and sell it to Royston.
Absolutely. And not just me, hopefully all the other potential treasurers that might be interested in that solution.
Super cool.
But I mean, just to quickly mention, in terms of Treasury, there are a lot of solutions. You can kind of sign up. I mean, I say we've got 13 cloud-based solutions, but from a core Treasury perspective, we've got a Treasury management solution, with Cooper, we've got our online trading solution with 360T, and you've got your bank confirmations using Finastra. So those are kind of three main ones that sort of typically get used regularly. But then you've got market data. So what I'm trying to illustrate here, I guess, is you can go through a long list of solutions and vendors that exist to provide what I'd call fundamental data processes that any treasury function requires. But in terms of what would be the next phase, what would be the next step? So one thing that I've kind of realized or am looking at is having 13 cloud-based solutions is not brilliant in my view, because for the simple reason, I mean, they do the job, don't get me wrong. And it's great that we have them because they're certainly, I say, they're necessary. But they're all separately connected to our network. So we have to, log into the web browser or whatever. The data cloud is becoming a much bigger proposition in my view. And I think we're seeing more and more companies beginning to talk about, certainly the fintechs, about how you can access multiple solutions through one, almost like a single sign-on scenario. And I do believe that's the way forward, because why shouldn't you be in a situation where you don't have to? And you can imagine how the banks, which I know it's a bit more kind of further away, but with the right technology, with the right, that level of security around it, could then also partner on these same platforms. That KYC issue kind of goes away in one instant.
Yeah, so the KYC one, that's not what the episode's meant to be about, but maybe I'd like your insight on this as well. So every time I hear that complaint about the KYC one, I'm like, well, why can't there just be one KYC form you fill in once a year, and then everyone gets access to, you get a specific QR code or a specific, you have a specific code on this KYC platform, and then all the banks or all the partners, is updated, is still valid for this year, and that's it. Well, that seems like the simple solution, but that's too simple almost.
No, I mean, why shouldn't it be? I mean, this is the point, isn't it? We need to dream, but we need to be inspired and look and ask those questions, because that's the other problem. I think for too long, in Treasury at least, we've kind of accepted or settled, if I can put it that way, for what's available. And I want to answer that point about the rationale behind why. And I know you know this, but there's 12,000 banks or thereabouts globally, and I'm afraid, although they collaborate, I mean, that's rather arguable in SWIFT, because each bank, or there are some banks that don't use the same kind of fields as well, but they're notorious for not collaborating when it comes to anything. When you try and sort of ask the question with KYC, why? I do agree there are regional challenges around regulatory requirements, so you can't really blame the banks for all of that. But there's no reason why a group of banks, and interestingly enough, they're beginning to do this with digital currency. So I can see, I guess there's an element like the age old, does it in my best interest, or, what's the benefit for me, is I guess how the banks approach it.
What's in it for me?
Yeah.
No.
And so but I do feel that that's an area they could definitely work on and improve.
So that's where the regulators need to step in then, right? If every single corporate is complaining about the same thing and the banks aren't doing it themselves due to inefficiencies in communication, that's the role of the regulator to come in and say, hey, no, look, we're going to establish a standardized KYC process that all banks in our region need to follow.
Agreed. And I know that's mostly corporate banks, but let's not forget that 70% of this generation, 18 to 30-year-olds, don't have a physical bank account. What that means is that why do they need to open a bank account when it's so much easier to go on and open an e-wallet? Now, I know that's not realistic for corporates, but I'm just making the point that in time,
That's true.
if this isn't...
I have physical bank accounts. I don't use them. I just use my e-wallet accounts.
Correct.
I have multiple, but I use all my e-wallet accounts. And banks, they just can't keep up. They don't offer the same services. Their user interfaces are just not as
And they're easy to open.
tech.
You can open them within 5 minutes or thereabouts.
Yeah, Face ID and it's done. And then I can do everything in the app. But I have a couple physical bank apps which aren't that bad actually. I could open them easy and everything like that, and I use them. But then just I can't get my statements on the app.
Yeah.
I'm like, why can't I get my statements on the app? Or I can't do this kind of transfer on the app, or I can't do this on the app. You have to log into the website. I'm like, I just transfer my money into the other account and then do what I wanted to do there. It's as simple as that.
And so this is a very good point you raised. And this is where I kind of come from when I think of any challenge, whether it's specifically around treasury or personal. We're living in an age where there are alternatives and solutions to make life so much easier and simpler. So at some point, you kind of have to ask yourself, either if you're of my generation, do you continue to accept this state of affairs when you know there's a better way? But then you've got a new generation of treasurers coming to the workplace. Don't even ask that question. No. There's only one way. It's frictionless, efficient, speedy, etc. So
I don't know anything else. Whereas the older generations have seen worse.
That's what I meant about when so those companies that didn't see the writing on the wall. I feel the same applies now again. If people or companies, banks, whatever they are, don't see what's happening around them, what's coming up, they could be in for a big surprise.
Yeah. Super interesting indeed. Marissa, and then I had one last question for you on the dragons. What's the mistake that all vendors make when they come on, or the most common mistake you see with vendors coming on? So they make this like a behind the scenes of the Treasury Dragons, like Royston DaCosta getting interviewed about what he has consistently seen vendors. And this is the clip that vendors, when they come on the Dragons in the future, are going to look at and say, hey, Royston, you said we should do this. Here we go. What is that? What is that tip?
Okay. This is a classic mistake. And frankly, this is sad to see. It happens not just with the vendors, but even with banks. It's an age-old concept, right? If you're trying to sell a product or service, first of all, ask your customer what they want.
Right, so I was expecting something super innovative,
and fancy,
and that no one would have heard.
No, it's not. It's simple, basic 101, Treasury 101. Ask the client what they want. But I tell you what, you'll split the audience 50-50 here, because let's say 50% say, oh, okay, maybe even less, but let's assume this 50-50. The 50 said, no, but we do that. Well, the next mistake, or in my view, that's made is when they get the answer, they automatically either put that answer make it fit within their solution. So what you get in response is, okay, you've asked for this is what we can give you. It's not answering the problem I've got. Or they make an assumption that's what you've asked. In other words, it's about communication. So, and there are only few vendors I've come across that have done this really well, really successfully, and banks for that matter, where they take the time, invest the time to first of all find out what you want. When you've told them what you want, they come back to you and say, if I've understood you correctly, I think this is what you've said. Or they will kind of question you and say, okay, specifically what are you trying to solve for? I think problem has been with the way general, I'm not a salesman, but I think generally with sales, it's a more case of, if you say you want that orange to be pink or even blue, right, okay, I'll just write a check out, I'll paint it blue for you. Rather than say, why do you want that orange to be blue? What's the purpose? And only one vendor, or at least one person, I'll mention his embarrassing a bit.
So yeah,
Martin Bellin, an icon in the treasury industry, is the only person that I've come across who had actually challenged us when we first came across these solutions and said, but we want it done this way. And he said, why? And it's not that he was being confrontational. He actually genuinely wanted to understand the reason. And actually it was quite refreshing, because what that taught me personally was that it's more important about getting the end result than how you get there. It doesn't have to be the way you've always done it or the way you've done it in a particular way. If you get that result that you're looking for, what does it matter if you go route B versus route C? And that also shows understanding as well, understanding of your problem And it's kind of a neat way of helping, because at the end of the day, every solution is different, obviously, but the value you can get out of solving the problem, that pain point, it's insurmountable, actually. It does get a lot of goodwill out of the corporate, as it did with us, trust, relation building. And, this works equally well with banks. But unfortunately, and I know we're not talking about banks here, but just to kind of relate my comment there, quite often, banks are, let's say, instructed or whatever to sell a product. And, sometimes you can't lose, I think, not only that, goodwill potentially from the customer, because how's that solving the pain point I've been telling you about, whether it's a KYC or payment or something else? And you're kind of like, well, I don't like to talk about that, so we'll just put that to one side. But I've got this amazing product. Yeah, but that's not what I'm concerned about at the moment. And as I say, coming back to the vendor, this is where I say, listen more to what treasurers are asking for, or be bold and ask them what it is they want.
So I remember doing a project management training in my early parts of my career, and the trainer gave a very great example inside the workshop of how you think you've communicated what you're doing properly, but in reality, people perceive things very differently. And the exercise he made us do was, he split us into 4 groups and 4 different tables, 5, 6 people on each group. And he said, he gave us all a piece of paper and he said, okay, write down all the words that you associate with trust to each group. Okay. So we all wrote down, okay, trust means communication, trust means this, trust means this, trust means this, right? And so he gave us all 10 minutes to do that or whatever. And then he wrote up, he made a square on his flip chart, and he said to each table. And so while we were doing it, he also said, don't listen to each other's, don't shout it too loud, all that kind of stuff. He wrote out, he got each table to write out all the words that we associated with trust. So in each square, and trust means communication, trust means this, trust means this, trust means this. Across the 4 squares, there was not a single word that was common.
Wow.
And there's about 50 words on that board.
Wow.
Not a single word was common.
That's incredible.
And we were amazed. We were absolutely amazed. I mean, before he started writing, he said, how many do you think will be in common? And we thought, oh, come on, like 40% at least.
Yeah.
Right? And he said 0. And he said, every time I do this exercise, maybe 1 comes up. Sometimes, but in reality, every single time the same thing happens. And the lesson from that was, just because you think you've communicated, hey, I want trust, I want to establish trust, for example, doesn't mean that the other person's definition of trust is your definition of trust. Right. So likewise, just because you say, hey, I want this, doesn't mean that the other person understands what this really is.
Correct.
And you need to say back to the person, hey, so I understand that you want this, which means this. Well, it goes, well, no, not quite that. I actually want this, and I actually meant this. And so that level of just what you said right there, relating back, hey, this is what I understand that you want.
Yeah. And
making sure that you're on the same page about understanding what cash flow forecasting tool is. Saying, okay, why do you want a cash flow forecasting tool? What's missing in your current cash flow forecasting tool? What is it that you're actually trying to achieve from a cash flow forecasting tool that is solving the pain point in your business? What is the pain point that you see day to day? Okay, why is a cash flow forecasting tool the one that's actually going to get you there? What's missing in your current one that's stopping you from getting there? It was a very powerful lesson. It was years and years and years ago, and it really sticks with me to this day because I was so gobsmacked that not a single word was the same.
It is quite incredible. But that's, again, like you said, a very powerful analogy and example of how it holds true. But yeah, and it's not, as you say, it's not rocket science. It's just a kind of basic sales 101, I would imagine. But yeah.
And, Royston, thank you so much for coming on the show. Super informative discussion. Is there anything that you'd like to add on any of the topics that we've discussed that perhaps we didn't give you the opportunity to say? Or
yeah, well, do you know what? I wasn't going to say. We didn't really talk about ESG. And I get that's not one of those topics that appears at the top of everyone's, certainly treasurer's list, but I do believe it's a huge topic for obvious reasons. I know we haven't got enough time to cover all of those components, but at the very least, I come back to this next generation of treasurers that's in the workplace and going to kind of slowly but surely move forward. It's what they care about most. And rightly so. Rightly so. I mean, apart from the E bit and the S and the G, there's also now a new statistics I've heard, which is by 2030, the drinking water globally is going to reduce by 40%, is what I picked up on this conference recently. So, you know, whichever way you look in terms of the environment, we need to take more accountability for it. And we can, not just in terms of individuals, but as treasurers, by trying to make sure that we look at sustainable products. But the social bit is a game changer because, particularly since the pandemic, and I grew up in an era where we weren't able to work remotely and we weren't able to have that work-life balance. But we all know today's generation will not tolerate anything less than that, which is good. I'm a big fan of that. But it's not just that. It's also about the diversity and inclusiveness that brings along with it. Unfortunately, in my view, Treasury has never been a big kind of proponent of, and I'll give you an example. So very proud that Ferguson do a fair bit of training around this area. They've had menopause training, we've had training about unconscious bias, we've mental health. It's really trying to capture, make sure all groups are included. But it's important. It's important because particularly as we look at today's world, especially since the pandemic, we cannot afford to ignore that, these are important factors and potential requirements that people are looking for. But also, I believe that's in many respects to productivity and, again, talking about balanced work life, also mental health. So, yeah, and then governance, clearly, that to me has always been the catalyst for trying to make sure that we get these very positive changes into the workplace much faster. But that's the only thing I wanted to quickly add.
No, that's great. We've done a few episodes on ESG. If people are interested to listen more, we did one with Etienne Chalamage where we really talked about can Treasury have a real ESG impact and how you go about that. That was episode 128. We had Alex from Fitch Ratings.
Oh, yes.
Director of Fitch Ratings, who talked about the Fitch ESG score.
Yeah.
And how that relates to treasurers and whatnot as well. And we had Leanne Perkins talk a lot about diversity in the workplace and whatnot as well. So we have done quite a few episodes on it, but happy to have you on again in the future to talk about it more, and specifically around that whole thing about how does Treasury really play its part in the ESG world as well.
Yeah, I mean, I'm happy to do that. Again, I have views about it. I don't know. I have seen enough of how much. Yeah, no, sure. I think I can talk to it about what I see Treasury doing. And I was trying to say within Ferguson, it's mostly from a corporate perspective because, I mean, within certainly the UK, I'm the only person in Treasury, but there's lots. There's a fair bit of information. In fact, I'm going to be doing a panel session with Bank of America on ESG, and one of their guys, I forget his surname, Craig's on there from Fitch. So they seem
nice.
like quite a.
No, 100%. Royston, appreciate you a lot. Thank you so much for coming on the show.